Hello and welcome to our weekly look ahead at the markets here. And I just want to flag up three big ticket items on the radar this week. Now, of course, first of all, Monday is Easter Monday, so the markets in Europe will be closed. The US reopens though, and we do have some data out of there in terms of the PMI, manufacturing PMI, so watch out for that one. Coming up though this week, the big events will be the Fed meeting minutes, telling us a bit more detail about what policymakers ran over in their March meeting. The Fed has been very, very clear that it's not about to raise rates. It has expressed its willingness to let inflation and the economy run hot over the next year to 2 years as it tries to get back to full employment. It's no longer worried about inflation running ahead of 2%, and we should stress that whilst there will be some hot readings over the next few months from the CPI and PCE numbers, just mainly because of the year-over-year effect caused by the pandemic last year, the base effects they're known as. The Fed is willing to look through that, but the market may look at these inflation readings and start to react as well. So these sort of Fed meeting minutes, Fed decisions, and the path of bond yields, which last week hit their high since January 2020 on the US benchmark 10-year yield, that is all starting to become more and more important as the market tries to work out when the Fed starts to dial back accommodation. Does it start to taper bond purchases later this year? That will be something that we'll look for in the minutes. Is there any discussion about tapering of bond purchases? We think probably the Fed is willing to wait on that, but it's just a question of whether some policymakers are expressing a view that this is the way that the Fed ought to be thinking. Also this week, another central bank in action, the RBA. Its cash rate decision will take place. No change expected. The governor has made it clear that he doesn't think they'll be moving on rates until 2024, so we need to keep an eye out for any language about the path of monetary policy, and also what the RBA thinks of the path of Australian growth as it recovers from the pandemic. Finally, April 7th, we were going to keep an eye out for Deliveroo. Now, it got off to a terrible start on the market last week. Shares falling 26% on the day to 287p, down from 390 pence where it was offered. A terrible start to trading, but April 7th is when unconditional trading begins. So up until April 7th, in theory, all the trades could be unwound. That's very unlikely at the time of recording. Anyway, we think that's very unlikely. So April 7th is when people that took part in the retail part of the offering, about 50 million quid's worth of shares were offered to customers. About 7,000 people took that up. They will have watched the slide in the share price with some alarm, and they can begin trading those shares from April 7th. And people, I think, can also begin adding them to their ISAs and SIPs from that date. So that is one to watch out for, because it could create volatility around that Deliveroo share price. So a few things to watch out for in the coming week. It's a holiday shortened week, but nonetheless, plenty to keep you active and interested in your trades. That's it for me for now. Thanks for watching.